Welcome to today's weekly technical analysis for June 17th to 21st. The markets took a bit of a dive on throughout the midweek, simply due to the Fed saying they will eventually pull back the economic stimulus plan, which I'm not sure why it surprised everybody, but it did. And therefore, commodity prices suffered, and so did the TSX. So let's take a look at the TSX 3-year weekly chart. As you can see, not the best week for sure. Definitely closing lower than it opened. It broke through the 12,000 mark and closed slightly under 12,000. So definite downtrend. As you can see in the MACD, couldn't cross over, touched a couple weeks ago, and then headed steadily down. Histogram bars are increasing week after week. Definitely not a good sign, showing that strength is moving away from the index. As you can see, RSI and stochastic both sharply down. Stochastic can't get much lower than this, pretty much almost at zero. RSI still heading down. So very, very bearish on the TSX. Not looking so good. Let's take a look at the 6-month daily chart. As you can see, closed down below 12,000 slightly. MACD and histogram both showing negative signs. MACD heading lower, histogram bars growing longer on the negative side, so not good. Interesting on the RSI, starting to turn around a bit due to the uptick on Friday. Is it false hope, or are we just kind of basing out? I believe we should see a rebound over the next couple of days when the market reopens on Monday as it comes off these lows. Stochastic showing a beginning of a turnaround. I didn't give it a blue circle because it's still quite red. We're coming close to another inflection point, which is good. That's what we want to see. Oil, over the 6-month period on a daily chart, has gained $5.92, almost 7%, but steeply declined over the last couple of days. We saw from 98 to 94, which is it's a big drop, but still keeps it in the positive territory. There does seem to be some support here at the $94 mark. Taking a look at the 3-year weekly chart for Enbridge. Again, red, not pretty signs on the indicators, and on the chart itself, we've fallen below 45. We closed down for the week. Again, not good for Enbridge. Looks like it could be heading lower, but we'll have to wait and see and look at how the market rebounds after the sell-off this week. On the daily side of things, you can see not as bad. We have a MACD touch here, and the histogram is showing flat and slightly negative. So I gave it a blue bar, a blue circle. RSI is flat after falling and starting to turn higher, so I gave that a blue. Stochastic is still negative, but we're beginning to see a turnaround here. Just looking at the price bars itself, the last time it was around these lows was beginning of 2013 in January, and we saw it take a mini run higher. So with that in mind, we've had a steady climb and then 1, 2, 3, 4 days of decline. And as you can see in most stocks, there will be a gap down through the market closing due to the Fed's announcement and the market overreaction. So if you can get it, if you have bought under 44, it's definitely a good price. I wouldn't anticipate it hitting 42 anytime soon. I would expect it to turn higher. But again, you have to wait and see what the stock does. Remember, you do need to have your stop losses in place as we continue to trade in this very volatile market. Now looking at IMO, 3-year weekly chart, we're sort of basing stage 1 here on a 1, 2, 3, 4, 5, 6, about 3 months worth of data we've been basing Histogram bars have slowly shrunk week after week after week. We're pretty much at zero. The MACD is touching the signal line. What is positive to look at, however, is momentum indicators, while not as strong indicators as the MACD and the histogram, are turning higher. Okay, we see a cross here turning higher on the RSI, should bode well for the coming couple of weeks. 6-month daily chart, you can see trending between 42 and 39 consistently over the last couple of weeks. It's been 39 and 41. We closed lower than we opened here on Friday. MACD touching. We may bounce higher. Histogram still positive but shrinking. RSI flat, kind of in the middle, but there's room to move higher. The stochastic has crossed lower, but again, we see a turnaround here, looking that it may reach an inflection point. Hopefully sometime next week, we can see some higher prices with energy stocks as oil rebounds from its mini drop. Suncor on the 3-year weekly chart, not looking very out of its range at all. 27.5 to approximately 35 has been its range since 2012 here. As you can see, very, very clear pattern. Kind of had a bit of a stuck reading here, as these two bars look very much the same on a weekly basis. MACD is above the signal line. Histogram bars are positive, so that's good. Negative downtrend here on the RSI, and of course here on the stochastic looking not so good. So last week you can see it closed pretty much where it opened, but below the 31 mark. So that's something we need to watch out for. We have a negative crossover back here, and the divergence continues to stay about the same. The histogram bars looking like the divergence is growing on the negative side. So that's not what we want to see. RSI flat. Momentum really isn't with the stock. And again, stochastic here is crossed down and heading lower. Unlike Enbridge and IMO, we do not see the uptick here. So that shows that the momentum is still fleeing Suncor. Taking a look at Royal Bank of Canada, the 3-year weekly chart shows, again, peaked at 65, come down to 60 over the last couple of months, and again, definitely closed lower than it opened, so not a good sign on the weekly side of things. Could be heading towards its low of 57.50, which hasn't been touched in a while. MACD and histogram showing strong divergence away, not a good sign. Momentum definitely fleeing Royal Bank, so we could see this drop even further over the next few weeks. 6-month daily chart touched 59 and closed above 59, which is good. One of the lowest price points we've seen over the last 6 months happened last week. We came close again this week here. So there's some real negative bearish pressure on the stock. You can see the movement within 1 day, but still closed just above 59. MACD and histogram, divergence is growing, not a good sign. I gave the RSI a blue circle, showing that momentum is sort of there, even though it is increasing. But I'd like to see a steeper increase before we turn that green. Stochastic showing a negative crossover, and but we will notice the sharp uptick here. So we could see another inflection point coming soon. But again, as you can notice, 59 here is a good support time. Could we see it break through 60? It tried to on Friday, but couldn't quite do it. Momentum is clearly not with the stock, but we have to wait for some news to see what's going to move Royal Bank. TD Bank, on the other hand of things, again, very range bound since July of 2012. You can see 80 to 86. and bounced back down to 80, came up to 84, and is coming back down. So the range is slowly shrinking, but looking at the indicators themselves, MACD signal touch, couldn't break through, crossed down. Histogram bars are increasing on the negative side, which is not what we want to see. Momentum, however, is looking to be starting to turn around. If I give it a flat bar there. And red for the stochastic, we are looking to have an inflection point coming soon. Bodes well for the coming weeks. On the 6-month daily chart, however, we can see that the stock opened and closed above 81. On Friday, it closed higher than it opened, and higher than it opened on Thursday as well, so that's good. A lot of volume and movement today on Friday and Thursday. MACD and histogram, both negative still. The strength just doesn't seem to be there, but momentum does seem to be with TD Bank. If you look at the RSI, we have an uptick, so I gave that a green just because momentum is there, and more importantly, with the stochastic matching the RSI, we have an inflection point. So that is another good sign showing that momentum is with the stock, and this could be something to look forward to next week to trade. Price of gold, 6-month daily chart, took quite a beating due to the issues with the Fed announcing the tapering of the bond buying program. Since the last 6 months, it's been down 360 points, or almost 22%. So not a pretty picture on the 6-month daily chart. CGL, we have the iShares Gold Bullion Fund here. Definitely took a beating because of the Fed news, and of course MACD turned down. But as you can see, with the reprisal on the Thursday, Friday, momentum is with the bullion fund. So if you're looking to get, if you're looking to put a portion of your shares away for inflation protection, now might be the time to get it, as prices are bound to move higher. HGU, again, same thing. We saw on Wednesday after close, the ETF get hammered and slowly pull back up. So the MACD is showing the decline as well as the histogram, but the RSI and especially the stochastic are showing the momentum are coming back. So remember, this is the gold bull plus. So if it moves up 10 cents on the gold side, the ETF is going to move up 20, so times 2. Here is the gold bear plus. As you would imagine, Wednesday's announcement would send this stock or the ETF much higher, but with the gold prices starting to turn around, you can expect it to come back down towards its 22 over the next few weeks. MACD and MACD histogram showing the strength, RSI and stochastic showing the momentum fading away, especially as gold prices will begin to rebound. Silver, same thing, over the last 6 months has fallen 33%, or almost $9.90. Again, nothing really showing any signs of life here, even though we begin an uptick. The Fed announcement has really, really hurt commodity pricing, especially gold and silver. This is SVR, the iShares Silver Bullion Fund. Again, same thing like the gold side. Momentum is moving back into these ETFs, even though the MACD histogram are showing otherwise. Prices are going to rebound. So again, if you're looking to hedge a portion of your portfolio, now might be the time to jump in. HZU Bull Plus ETF, showing the same signs as the SCR. Momentum is with these stocks as they move higher. The MACD and the histogram will follow suit. This is the lowest it's been in 6 months, so it could be a time to jump in if you like. The Bear Plus ETF, so remember, if gold goes up $2, the ETF will fall by 2 times that amount. Of course, with silver crashing that one day, huge jump up. MACD and the histogram are showing a positive jump, but momentum is slowly falling away as the commodity prices begin to rebound. So that's it for us this week. Questions, concerns, comments, let me know. Joel Chandran at TrenchInvest.com. Subscribe to the blog. You'll get the updates automatically. There's a website, www.TrenchInvest.com. If you'd like to schedule any sort of time to meet with any of us, please let us know via email, and we'll gladly set a time to talk. So that's it. Have a great rest of the week, and we'll see you soon. Bye now.